Hello and welcome back to the Agribusiness Academy podcast. In this episode, we're joined by Lorna Grace, an expert in agribusiness finance. We haven't been able to cover this area much in the past, so we're really lucky to have someone like Lorna with such a broad experience to come and talk to us. Lorna is a financial development specialist with more than 20 years of experience in international and domestic finance. She's consulted with several financial institutions in Asia and in Latin America, so hopefully there's something for everyone in this podcast. We're also joined by Dr. Vijay Andanala from Agribusiness Academy to offer some extra insights. Without further ado, let's get into the interview. So we're here today to talk about agribusiness finance. We've just been together recording our first session for our new course at Agribusiness Academy. And it would be good, I think, for the listeners to have kind of broad introduction to agribusiness finance. So how can we say that it's different between Western markets and some of the developing economies that listeners would be coming from?
So in terms of the difference between sort of a Western or developed economy and developed agriculture markets and ag finance versus the developing, is that a lot of the target actors or the target recipients of finance in, say, the Western markets are usually bigger businesses or farmers with larger land sizes, which just naturally means that it's a more interesting business opportunity for a financial institution. And if you compare that to developing countries, something like 80% of all land in Asia and in Africa are owned by smallholders. And smallholders would be, could be anywhere between, a terrea of land or a tenth of a hectare all the way up to maybe 5, 10, 15, 20 hectares. It really depends on the country. So we automatically have smaller units of business that are doing agriculture in terms of the production, and that's all the way up the value chain. I mean, these are not always big investments. So that in itself makes it in some ways less attractive, or maybe more challenging to be able to both reach them, generally to reach them and to get your services out there, financial services. I think the other thing is that especially when we talk about value chain finance, we do rely on relationships that are existing between the actors, and they may be contracts or legal, that are underpinned by legal relationships. And in the developed countries or in sort of Western markets, our legal systems are quite a bit more robust. They function a little bit better. They're well defined, and so when you write a contract, you know that you actually have a recourse afterwards. So that's not going to take so long to get through the court systems. Whereas in developing countries, you may have a very weak sort of legal environment where contracts aren't very enforceable, that they're not worth the paper that you write on, et cetera, et cetera. So that's another element when we're looking at that kind of finance. But the other, I think, generally is that the farmers or the agribusinesses will have more technical knowledge in Western countries. So you will get maybe agronomists who are farmers, or farmers, who are agronomists, or people who really understand a lot, the production systems. And whereas in the developing countries, you have very much lower technical education at all, if any. You have a lot of very traditional farmers who did it what their grandfather did. And that all goes all the way up the value chain in terms of sort of a lower education or technical knowledge, and on the other side also with the banks and the financial institutions. So they also maybe don't have quite the technical capacity to evaluate agribusinesses or an understanding of the businesses.
Lorna gives it from both perspectives because she works in both markets. I come from the developing country setting. So what I can say is we are very early. We are in the early stages of the learning curve, so to speak. So I think the developments that are happening now, especially on digitization and digital literacy that is happening at the level of smallholder farmers, I expect that we'll catch up
Yeah,
onto,
definitely.
onto that.
And I also want to
those
also add into this is that the role of sort of other risk mitigating mechanisms that are in place in developed countries, such as like big insurance, production insurance or big index-based insurance that are really very prevalent, or even government-backed insurance facilities that you have, say in Canada or in North America, for example, as a last resort, which allows the risk to be shared or not ultimately borne by the production unit. Whereas in developing countries, because you don't have these different levels of risk mitigation or insurance or whatever, and the government themselves, sometimes they do bail out. But you end up having producers essentially that bear all the risk. So when you're looking from a financial perspective, you are looking at these actors in developing countries that aren't going to be able to rely on anybody else but themselves in the end. And there's a lot of offloading of all the risk to at the production level. So I think that's another issue where it's very different. Because if you're a farmer in Canada and you have the prices just go down for, like, say, barley or whatever, you are probably you realize that somehow the taxpayers via the government are going to somehow either support the price or bail you out at some point through subsidies or whatever. So we don't have that luxury in other countries.
Well, I think in another way, if I have to put it, based on what Lorna has very eloquently put it out, is that the level of the degree of incentive misalignment, if you would like to call it as, is greater in developing countries when compared to the Western markets, I would say.
Yeah.
That is probably a more appropriate way to bring context to that.
We've done a lot of work at Agribusiness Academy on food sustainability. We've had our mini MBA in sustainable food supply chains, and that's been a real hot topic for us. How does finance contribute to food sustainability?
So finance, of course, actually, we're giving this a little bit of thought just earlier, is that finance itself, if the business is sustainable, that you're financing, your financial institution becomes sustainable too, in a way, because if you're lending to good business, you're doing good lending, you as a financial institution become more sustainable. But from the perspective of the borrower in any of these value chains, potentially, or there's a number of areas, especially in terms of the environment. So farming sustainably from an environmental perspective is, there are certain types of financial products that are available, usually medium term, because these kinds of investments in sustainable farming or financially or sort of a sustainable environment usually require medium to long-term investments, so that don't pay off all the time. So things like what we would call water, some sort of water retention, manners of water retention, where we have a lot of drought. Or possibility of drought, or where we're seeing that basically the arable land is the amount of arable land for productive purposes is dropping, along with the essentially the issues around, like the Sahara and how that seems to be impacting what the remaining arable land is. We also look at things like climate smart agriculture by putting up wind barriers, or drip irrigation is another thing, where we're using basically trying to use what resources we have for a longer period of time, and not sort of expending these resources and then finding that we don't have a really good production unit anymore. So the financial, some, not in all countries, but in some places you are being able to see products that are financing sort of the medium to long term investments that farms, for example, are making in having a sustainable farm.
Yeah, and this came to my mind while Lorna was explaining this, is that I have seen some banks ask the sustainability dimension of an entrepreneurial initiative that the entrepreneur is running. So in the business plan, they are asking, how does it contribute to reducing food waste?
Okay.
How does your initiative contribute to increasing yields, or better prices for the farmers, or more transparency in the chain? So I think several financial institutions are catching up on that particular initiative. There are many forms of financing which is also supporting that sustainability movement.
So maybe this is directed at you, Lorna, and Vijay, you can pick up on any points that Lorna raises. Can you help us understand how value chain finance is going to strengthen smallholder farmers' inclusiveness within the agriculture food chain, value chains?
Yeah. Again, this is it's good to talk to you guys about this, because it's kind of you guys are very much from the perspective of the value chain, and I also try to consider what is, for example, you're talking about inclusiveness in the value chain. We always talk about inclusive finance. So inclusive finance means bringing people into the financial system, and you're talking about bringing people into the, and including the participation of people that are within the value chain. So I do think actually in a lot of times they're complementary, they're mutually sort of reinforcing. So when we talk about inclusive finance, we mean bringing as many people in with bank accounts or loans or savings accounts or any kind of product that it brings them in, and that's called inclusion, financial inclusion, and that's a big thing. And the same thing can go for the other side, is that if you're a value chain actor and you're able, finance essentially just empowers whatever the value chain actor is in terms of their whatever it is that they do. So it empowers them, it gives them the access to the resources that they need to do the work, to make the investments in the farms. And as a producer, if you're able to invest in your farm, and usually we start with just basically financing inputs so that you can bring in better technologies and have higher yields, that positions you better in the value chain itself. It positions you as a producer that's consistent, that's producing consistently, that's producing a consistent amount as well, potentially with with better technical knowledge. So I think that there's that kind of makes you a little bit you get a little bit difference in the power structure. And then when you move on to things like investing in certification or organic farming or rainforest or whatever, then you become essentially a farmer of choice for a lot of these purchasers, because you have all these accreditations, you're able to apply different systems, and that means in theory that you should be able to command a higher price for your production. So I would say that finance can definitely help empower the farmers or other agribusinesses in terms of how they deal with other people or other actors in the chains.
Yeah. From a value chain perspective, one of the biggest challenges from a value chain perspective is the information asymmetry. So if you look at value chain financing that tries to make information more accessible along the chain, that is the market side information coming to the farmer side and the farmer side information going to the processors, but also financial institutions. So if value chain financing can only be done when there is more information sharing and symmetry, so that really helps in terms of strengthening the relationships, but also in terms of bringing more innovation out of this value chain. So I strongly feel that value chain financing is a very interesting tool from a smallholders growth and evolution perspective.
And because it integrates more than just sort of in direct financing, ag financing, direct one-on-one type of financing, all that information or all that relationship is just between the bank and whoever the recipient is. But when you bring in other elements as a guarantor or distributor or a distribution mechanism for disbursements or whatever, you really start to, what the whole relationship reinforces and along the value chains, because a little bit more respect. Let's put it that way. You get some respect when you bring some money to the table, and so I think that's definitely a point in the favor of the value chain finance for inclusion.
Speaking of that inclusion from the finance point of view, with financial institutions, how well do they understand the tools that are needed for agriculture and what's available and what's needed?
Yeah, so I get the impression in my work is that I think that in the Western markets, there's a lot of, for example, finance is a big chunk of finance, say in the U.S., is done by credit cooperatives. So they're basically farmers cooperatives that do credit. So there's obviously already a knowledge of how production systems work and cash flows and things like that. With in developing countries where the finance, let's say outside the value chain, the external finance is provided primarily by small financial institutions, some microfinance, credit cooperatives, sometimes banks, depending on where they're at. I would say that they have gaps in terms of their knowledge of production, modern production. Of course, some farmers aren't modern yet, but in terms of the sort of market systems and production, and we find that typically when you if you want to get into ag finance as a financial institution, we kind of go by the motto like in for a penny, in for a pound. If you're going to do it right, do it well, because it's not a business you can dabble in. And so it's not, so we always compare this in one of my courses we give was like, what's the difference between, say, financing, if you're a microfinance institution, let's say, financing trade businesses, and financing production businesses. So if you look at trade businesses, they have, weekly revenues, and they're moving cash constantly, and they have returns that are basically, they have what they call, help me here, they have a premium on their products. So they have stock, and then how much they rotate the stock, and they have a markup, and that's the way it goes. So it's pretty. Yesterday's business is a predictor of tomorrow's business. If I put more stock in, I add a ratio to that, and I'm going to get this kind of sales. And when you look at production, it can change every season. It may change. The biggest issue is that we have land. So we have land, the farmer has land, and how he chooses to use it every year can change, depending on access to finance, what the markets are dictating, and those kinds of things. So so getting into that mindset where we have to look, essentially, financial institutions have to look at crops and value chains, and even within the value chains, there can be multiple sort of striations, depending if you're doing export or retail, or you're selling to the urban markets, or you're selling to the local markets. So there's just so many permutations that you really, somebody who's doing good ag value chain finance is going to need to know those things, and it's quite a bit more complex than dealing with just sort of small trading businesses. And sometimes what we end up with, say, for example, I'll give microfinance as an example, is that you'll end up with the same type of product that you use for a small trading business with like monthly repayments or weekly repayments, and then you apply it to a production business, and that's like absolutely useless and not. It basically puts people in debt that they can never pay. So I think that there's a different. You have to have a different mindset. You potentially need to bring in people who understand the value chains. Maybe they're agronomists or environmental scientists, or people who've been in the markets for some time. And you need to sort of create an ag finance unit around it if you're interested in going into this business. And kind of a rule of thumb is if you're looking at if you're looking at 5% or 10%, it depends on how big you are of your portfolio. In this business, it's worthwhile to have an agronomist on staff, even if it's just for looking at risk and those kinds of things. So I do. So they're kind of unprepared, but it's not just in human resources. Also, their products aren't really good, and that's what we spend a lot of time working on is financial products and that accommodate. Whatever the cycle is, if it's a production cycle, if it's an agribusiness cycle, because the other big issue is just the cycles are just completely big times in business, not just in production, agribusiness, I mean, if you're buying and processing, you need to get some capital in, working capital, to purchase whatever it is that you want. And if you can store it while you can lower your input or your supplying costs over the course of the next 6 months if you purchase it, at the farm gate at the end of the harvest, where the prices are kind of erratic. So you really need to know that. You need to know the cycles. The cycles of crops are different, how they behave, how they're exported. So it's a bit of a barrier, I think, to getting into. And the best, we did a study, which we can put a little link at the bottom of the podcast, is that we've done a study where best practices of financial institutions delivering sort of ag value chain finance is that they do actually have an ag unit. They do hire agronomists.
So there are good examples.
There are good examples. Yeah, there's good examples of people that are getting not necessarily ag value chain finance, but ag finance, which is the bigger universe, and ag value chain finance is within that universe. So you will definitely, they all use cash flow tools, the ones that are, that they look at things. They all have crop production costs loaded into cash flow tools. This is what they do. This is how they manage to mitigate their risk and expand their markets. So, and see what the markets are.
I think I completely agree with Lorna that the financing people, all of them have to understand the dynamics of the agri-business value chain. So one of the largest food and agri-bank that I know of is really wanting to have an agribusiness education for their whole of 60,000-70,000 employees, just to get a feel for it. Of course, different people at different levels needs to know different things, and they might be able to absorb different amount of information, but I think it is very important that they are exposed to the learning and coaching. They should have access to the coaching from people like Lorna herself, who could guide them on understanding the existing products, help them building better products, and execute those products in the right way. I'm assuming, Lorna, that you're not from agribusiness background, right?
No.
Not from education, but you've learned it.
I'm from investment finance background.
Correct. So the same way,
you learn it.
You learn it.
But it's interesting you mentioned that, because I actually think when you're on the ground, it's easier to train agronomists to know something about credit or finance than it is the other way around.
Right.
I think because agronomy is more of a science, and credit is something that's a little bit, I think, easier to capture. But agronomy is just so vast, and that recognition that it's quite vast, and it's sciences, and it's a.
To that point, I am in the sector for 10 years. I am quite proud of my knowledge and understanding of it, but I don't understand agronomy, but I can make decent decisions on farming, farm practices, and a lot of stuff.
But you've been in it for 10 years.
10 years,
yes.
right. So
even I can go to a farm and say, okay, that looks like crap, and that looks like that farm over there looks good. But believe me, you have some people that go to a farm and they'll say, is that tomatoes?
Yeah.
Or those are lovely tomatoes and they're melons. So, I mean, obviously they didn't have the fruit at the time.
Right.
But it's sort of, so I think that you need to, maybe it's a bit of a balance. But I do think, I know when I've worked in kind of projects, we've hired agronomists mostly to work with people, with financial institutions on credit. Yeah. Partially because that's what they need. Because they already know the finance. So you work a lot more on getting them the understanding of production systems, the markets, the cash flows that come out of the farm.
I think at the level of financing institution, people working with financial institutions, I think the knowledge they need to have is what are the questions I need to ask, and how do I make my decisions, more than the science and the technology of the agribusiness.
Oh, excellent.
So what questions to ask to know that when I'm going to agribusiness from a mining sector, I need to ask completely different questions. I need to understand more than, or I need to understand different things. I think that perspective already helps a lot, because at the end of it, the decisions need not have to be made with a full understanding of the science or the technology.
No, absolutely.
All that stuff.
And I would argue that it's actually not the science that's so important, it's the market side. Whatever is in the value chain, how the markets are in that is more of a distinct thing that you need to know as opposed to the science of what goes into the ground, definitely.
And how this production and market dynamics are aligning. I think some understanding of that is very important. And again, it need not have to be the science of production in itself, but I think the market dynamics, the production dynamics, and how they are aligning, I think that understanding is critical for anybody who is playing a role in agribusiness, I think, not just financing institution people.
Finally, I want to just touch on innovation, and this might be something where we bring up some ideas that we can maybe revisit in a kind of future podcast as we see how these innovations take more of a hold. Maybe I could come to you first, Vijay, because we've done some webinars of late on blockchain and those kind of things. So what kind of innovation have we seen within agribusiness finance, and or maybe what are we looking out for as Agribusiness Academy that we need to cover?
I would say that financing marketplaces, beyond borders, I think that is an interesting concept. To what extent that is being, like in the past, if you would see, an entrepreneur would be mostly locally financed, but because of this internet and exposure and all that, now entrepreneurs from anywhere in the world can hope to get finance from anywhere else. I would expect that that kind of thing will take off. So it's financing marketplaces. They call it crowdfunding at this point, but crowdfunding is too far away from farmers, I would think. Just spot marketplaces, digital marketplaces. And in that context, I believe that the value chain financing, but blockchain authored value chains, I think will have a huge role to play where there is more transparency. Again, I'm not a blockchain expert, so I can't make that comment on how valuable that is. But very recently, I was part of the webinar where they are really making the whole, bringing the transparency to the whole chocolate value chain in a pilot with blockchain component in it, and I found it very promising. The one that in the international trade level in the commodity market, I think we covered a story of Binkabi where they were trying to close this currency related inefficiencies using a barter block with a blockchain component in it. So that is very exciting. But I'm quite sure several localized solutions will also develop, local marketplaces will also develop both for finance but also for their produce. I think that will be very, very interesting going forward. Yes.
And we should say, of course, that we have coaches in this area on the blockchain and those kind of
we are investing heavily. We are investing heavily from the Agribusiness Academy point of view on new technologies, whether it is big data or blockchain or data science. I think those are already very important, but I think they will be more and more important when the power of these tools go into the hands of people like Lorna and and the other financing people in the financial ecosystem. So to empower, sure.
And from you, Lorna, the kind of innovations that you've seen?
So just listening to Vijay and then the presentation we saw yesterday a bit. So if I were going to categorize sometimes I just think that ag value chain financing and ag financing is still kind of behind not just in the innovations, but even just behind like what's currently practiced.
So it needs a lot of
and
innovation
other,
just to
so we
catch
just
up.
need to catch up first. But beyond that, I mean, to me, the near term, which they still don't use as well as they could, is the big data stuff, and really maybe using the using the ability to credit scoring and those kinds of things for the information. Then I kind of look in the medium term. I don't know what the medium term is. Hopefully 3 to 5 years. I'm hoping it's all going to happen before I retire. Is digital finance. So how we are using digital finance. Some places better than others. We were just talking earlier about how I feel like digital and use of MNOs and phone banking and that could theoretically be a game changer for example, small farmers, smallholders, and even the agribusinesses that are moving transactions through. So I see, and when we are seeing some of that as pilots in certain countries with rural and farmers. Obviously, in the urban areas, that's been reasonably well developed. So things like disbursements using, having a disbursement to your phone that you can then go cash out at an agri dealer, something like that. So we are starting to see some pilots in that. So I see, and then repayments. We're definitely see some repayments through your phone. So this is a big game changer for farmers who don't have to, literally in some countries get travel for 4 hours just to make a payment. We're not, hopefully not making payments at the branch, So. And then I look at things like blockchain, which I think is a little further along. And I don't, I'm not an expert in the blockchain thing. I hope to do more. But what I originally thought, and others have discussed, is blockchain would be useful for land titling and land registry, which is a huge issue for farmers in developing countries where land titling has been so messy. So, a lot of customary rights. The land, even if you can get a land titling system, there's so many, conflicting ways of registering. The registering itself may not be digital, so and it's not shared in a sort of it's more of a regional thing. So I think there's a lot of there may be a lot of room for that at that level in the land titling. Obviously, transactions should be a fairly easy thing to get in on, but. We need to get them in the system first, and a lot of times if you don't have the land titling, you can't get a loan. Unless you're doing value chain finance, in which case we don't necessarily use land for collateral in that. But certainly to me that's an issue. So that's where I see some of the, and obviously, just value chain finance itself is to some innovative. In some countries it is innovative. In other countries it's like old news, so it's part of the thing there.
Yeah, I think I think Lorna has brought very practical issues to the table, and I was just trying to put into my value chain framework that I always work in. I see there are very high-tech technologies, so to speak, like the blockchains and the big data and all that stuff. They will get into the agri-value chain with a pull from the downstream players like big processors, that is brands and retailers. So you can't push it from the farmer's side. Yeah. That won't happen. So the big certification bodies, big brands and big retailers have to take lead if something has to happen on those technologies. Now, Lorna talked about very simple transacting sort of technologies where transaction supporting technologies where just people have to just be able to make payments and those kind of simple things, or just some small for borrowing $10, $20 probably they have to have a marketplace which just closes off the deal straight on. You need that money, and it's like topping your mobile phone, so to speak. Topping up your mobile phone. So I would think that when technologies are being developed and put into the context of value chain, they really need to understand what is this technology about. Should it be pushed at the level of the farmers, or does it require a pull from the market side, that is retail and brands? I think that is a very good framework for AgTech technologists and investors to work with, because I feel that things are trying to be dumped into the agri-value chain without understanding or missing the context. I would not say without understanding, but I think missing the context. Even I missed context now, and I had to correct myself. And interestingly, I could see this because the other day when we were doing the blockchain session, this was one of the questions, that this is a far-off technology. Yes, if you're working too much with smallholder farmers and looking at it from their perspective, yes, it is a far-off technology. But I'm seeing a lot of interesting pilots being done. Like, for example, Walmart is doing a very, very interesting food safety pilot on blockchain, using blockchain. So, yes, when Walmart decides to do it, it will happen.
I guess there's also the kind of cryptocurrency element of blockchain and being able to send money faster and, in seconds anywhere in the world. So
we see that at Agribusiness Academy, isn't it? That people want to learn, they're not able to pay, or they don't have the currency to pay, or they don't have the... So it is a challenge. And even at the education level, if it is a challenge, you can look at it from a smallholder farmer's perspective where they don't have that much of literacy or other elements to support them.
Yeah. And I guess and all of this is probably framed around connectivity generally, particularly in developing countries. If there is no connectivity, then you can't pay digitally. So that's...
Yeah, which we're seeing. I mean, most countries, most farmers have a phone, which is interesting. That fortunately has been out there. That sort of hardware is out there. People are generally used to using phones for even getting prices, like farm gate prices or whatever. I do think, though, when you're looking, I look at it from a perspective that, for example, all the using, say, phones for disbursements or repayments, that kind of the cost implications of that for a financial institution are very important. So I think they can be they can certainly adopt that technology because they say, okay, I don't have to go anywhere. But the cost applications, it's not going to be a financial cost or a monetary cost for a farmer to take, a little bit of that, but to take 4 hours out of his day to go to a bank branch. So we can reduce maybe the non-financial costs, the time costs and this kind of thing. All these costs that aren't really included when we talk about the cost of finance. But when you look at the day-to-day thing of a number of farmers, maybe I put them in semi-commercial to non-commercial. So if we eliminate them at this point in time, the non-commercial farmers, their big cost, to be honest, is pre-financing. So kind of exploitative pre-financing of their product. So somebody gives them like basically half of what they think they give them some money, and it happens to be about half the value of 10 bags of grain. And they get them to promise them 10 bags of grain at the end. So essentially your financial cost is just unbelievable because of the difference in prices. And there's so many, even in some of the, the cocoa and the coffee, like these tighter financial chains, where this happens still. And the overall, and people take it because they have a cash issue. They have a cash issue because they don't, because they're on this cyclical, this kind of almost a vicious cycle of planting and harvest. That there's many months in between that they have no money, or even prior to planting. So what we end up having are people just getting money just to eat, to pay their school fees, or this kind of small stuff. But it's a huge cost to them, and that's not going to be something that's going to be fixed with digital, but it will be fixed with better financial products. More cash-based products like credit cards. Yes, people say, "Oh, I'd never give you a credit card to a farmer," but I think under certain conditions, those things would work. Where as long as the economic unit in general is profitable, you can develop financial products that will really meet what the biggest costs are for the farmer, which in many countries are these kind of pre-financing issues.
Oh, no, it's a great point, but I would say it other way around. I would say that if banks and financial institutions don't come up with these products, then digital is going to come after them. I mean, I strongly see that happening through the digital models.
If digital is allowed to, if they're able to do that, to run money through it and finance, not every place you can do that. They're restricted to real financial institutions.
Right.
But yeah, definitely you can see that.
Then that would happen when regulations would change and things would become more smooth. There are people. Crowdfunding model suggests that people are willing to invest their money or put out their money in different channels out of the conventional financial institutions. So when there is better credit scoring and when the chances that the repayment is higher becomes true, and the digital platforms become very smooth and robust, which will happen because now I use a technique, a product called TransferWise, and I can transfer money all over the world at 1/5 of the cost that the financial institution charges, and I think the product is extremely robust, and they can easily scale at the sector level and create business-to-business transactions because it appears that the whole infrastructure is easily doable at this current time. It's only the regulations that...
and then I still think in so many cases the technology is there to do things. The technology is there. It's just, like for instance, one of the things we've thought about is having like a grain bank, which you bag and tag producers' product, and then you essentially create financial products out of the stuff that's in a warehouse. And so it's a commodity. You bag and tag. They have a UPC code. It's all on the phone. They say they get up one morning and say, "I need some money for school fees. I'm going to sell." So, sell, bag, and then, whatever. It's just somebody sells a bag and there's his money in the phone, So, I mean, it's all there. It's just a matter of, getting people to, making it, in some ways, the digital part's affordable, but, you still need, in that case, you need a actual, you need a place to store this stuff or whatever. Or even, or even having the farmer, deliver a product and it goes up the chain in some way, but he keeps some sort of like a record of it on his phone, which allows him to, can be stored way, way, way up the chain where it's much more viable to store instead of like down the road. And you might have a better, cost effectiveness of warehouses, or you don't even store it. You just give them a paper that says, this is what you own, like a, commodity Chicago, here we go. But it allows the farmer to have that direct ability to control it and making a financial product essentially out of that. It's there. We can do it, but we need to have the incentives for people to offer that local. And then we also need to at the small hurdle level and even at the agribusiness or the SME level, we need to when we do digital and kind of new technologies, there's a bit of a learning curve there. And a demonstration that you have. So it's not like overnight that people all of a sudden adopt. I mean, even cell phone adoption didn't happen overnight. There is sort of a thing where people have to see its use. And like, for instance, smallholders are very attached to their product. They like to see it. They like to see it in the bags. In some areas, you can't actually have ownership without it. You can't have a commodity being pooled and still retain ownership. You need to have it, packaged somehow separately. And that's the law, that's the regulation. So there's some few things that we need to sort out, but it's there. The technology's there. We just need to think about how to do it, and to get people on board and invest in it.
Yeah. Absolutely.
Okay, I'm going to stop you two there because I feel like we could talk about this for hours, or you two could.
We could.
So thank you very much for joining me. To find out more about our work at agribusiness.academy.